This is the AUDCAD 240 time frame, and this is a double top that we've had. We've broken structure just here, and now what we've done is we've pulled back up for what's called a 2618 trade, and all that is we look at selling the 618 fib. However, in this instance I didn't sell the 618 fib, but what I am going to do is just leave the 618 fib on. I actually dropped down to the 60-minute time frame because I wanted to see deceleration on this higher time frame and look then for an entry reason. So just before I do that, there is the double top right here, and this will now be classed as a third test, but 2618 as mentioned. So risking 36 pips here for 169, so this is trend continuation. Stops are just 12 pips above the high here, and if I drop down to the 60-minute time frame, let's just remove the orders and I'll show you why I've held off entering until now instead of that 618. So I was waiting for these candles here, these bullish candles, to decelerate, and as we got up to this level right here, we had two dojis followed by a lower low, lower close. That was my entry reason. We also had the RSI go over bought at around 88, and we'd come into the psychological number 9300. So a very good area to get short, and what it has meant is that it has saved me this much in pips. And it doesn't just save me this much in pips in terms of risk, 13 pips, it makes me that much in profit as well. So I made this trade 26 pips more profitable, and obviously less risk as well. So there we go, that is the trade. Go back to the 240. I think at the very least we're likely to see some sort of reaction here to the downside. Let me go out to the dailies. Forgot to do the higher time frame analysis. Okay, so basically we're in a downtrend, and we'd come into the wicks just here, and right there we can look for a double top. We got the double top, we're now playing the 2618, and right there, that big bearish candle, even though it is a positive candle, pin bar, inverted hammer, whatever you want to call it, big rejection candle, we're closed in the lower 20%, and it's all wick to the upside. That in itself is confirmation, if you'd like, that there's selling pressure up at this area. Okay, we're back for an update on this trade, and I have reduced down now the amount of risk on the table. And those of you that listen to these videos and just look how I do the underwriting, I have 4 philosophies that I stick to: psychology, risk management, risk reward, and the strategy, and they are in order of importance. So wherever I'm able to, or wherever price tells me it's going to do the opposite of what it should be doing, or what I believe it should be doing, and I can implement risk management, I will reduce down the risk where possible. So here on the 4-hour we had this double top, but then what we've actually done is we've then, if this is the wick here, if we start to close in there, then short opportunities are still valid, but because we're breaking above the closes of the candles into the wicks, then this is an indication to me that in actual fact we may not be holding this level. If we drop down to the 60-minute here and we look at my reason for getting involved in this trade, and I was looking for that deceleration here, which was we had a momentum candle, then we had two dojis followed by a lower low, lower close, followed by another lower low, lower close, and then what we've done now is this candle here, we've actually put in a big bullish candle, and it's a higher high, higher close. So everything right now is just indicating that we may not hold this particular level. So I've implemented risk management here, and what that has meant is that, well, let me just go back to the 60 and bring the orders back on. What I've done here is reduce down the risk so that this high here, my stops are at 93.20, just 2 pips above that, and it's meant that the risk has been reduced from this much to this much, so they're just above the highs. And there is one other thing as well which I just want to talk you through as to why I've done this. Oh, let me do that again. Use the wrong shortcut. Okay, around 27 pips of risk now. Okay, the other thing was, if we zoom in here and we look at what price is doing, so we moved up, we pulled back, we moved up, we pulled back. Now, whenever I see a run like this and a pullback, we can predict fairly accurately that price is likely to go to a 127 fib. Now that 127 fib up here takes me above this high. And so I'm really just putting together the case for how valid is the trade now, and is the probability still over a 50% chance of this thing going on to win, or is it now greatly reduced? And what I need to make sure that I don't do is actively move my stop for no reason and potentially sabotage the trade, because at the end of the day the stop goes in a place for a particular reason. And I have said this before, it's very, very rare that I'll move my stop, but in some cases when the level that I anticipated of holding didn't hold, we're seeing momentum moves. We're seeing that we're now closed on the 4 hourly into the wicks into that double top. Everything right now is just indicating that in actual fact, you know what, we could actually just rally straight through here. Of course, we don't know for sure, but based on my rules and during the very few times that I can do this, particularly with 2618 trades, because 2618 is not an active strategy that I trade, it is an entry reason into another strategy. And the strategy here was trend continuation on the higher time frame, using a 2618 as an entry reason, so not a strategy. So there we go. I fully expect this trade to lose for that 27 pips, but at the end of the day I've just implemented risk management there, and we'll see what the outcome is. We're back for the last part of the video, and as you can see now, what price did is we actually spiked up and put in a 3-bar reversal, and we were stopped out for 27 pips. One thing I would say here is that we're actually now closing within the wicks, and even though structure itself hasn't been violated, this is an indication that we never actually held the structure level here, which is where the closes of the candles were. We were actually still pushing up. So for me, this trade it is now invalid, even though we have this 3-bar reversal here. So minus 27 pips.